Hey, good morning, everybody. Welcome to today's live episode of that crypto show called The Closing Bell here on Friday, coming live to you from the Prime XPT Trading Academy here in Berlin, Germany. I hope everybody is doing well. We had quite a week, and I think if I say that, that is really an understatement. So we want to use today here to kind of recapture what happened this week. I want to give you a quick update on how the chart situation is at the moment in crypto, in stocks, in forex. Also an update, of course, also on our very popular Telegram trading competition. So we're on the final 3 days there, 3.5 days, and there are still some contestants really battling out the first 3 positions. More on that later. We're also going to look at an updated version of the so-called Kiss of Death. So that's a video I did, I believe, last week, Monday, on Bitcoin, on a on-chain pattern that has been forming there, that's confirming usually that the bottom is inbound of a bear market. And yeah, if you have any questions, as always, guys, feel free to just shout away here on the chat. If you're watching this later on as a recording, you can also leave your comments, your questions in underneath the video in the comment section, and of course I'll answer them all. So let me bring up my charts here. And by the way, if you are watching this right now, we have a nice promo code at the moment, one that we gave out actually exclusively for the live stream last Wednesday, called FEDSEP22, so FED-SEP, written in capital letters 22. And if you punch that into your account, you will get a trading fee reduction of 50%. So this is really, really great if you plan on be more in the short time frames, maybe trading 1-minute charts, 5-minute charts, everything where you need to trade a little bit more, leaves more money in your pocket. All right. Also, please leave us a like and subscribe to the channel. You know, that's the currency, so to say, we get paid in here at the price, at the Prime XPT Trading Academy. But enough of that. Let's have a look at the charts, and we can here very clearly, first of all, see, let's start here with Bitcoin, that nothing really has changed. It's still the same range that we've been seeing since it started, since it formed here on the 19th of June, 18th of June. So we've been in that range, in that prolonged sideways range, really for 3 months now. We had some breaks out for sure to the north, some trials. If we zoom in here a little bit, you can also see this large red candle we had there, where many of us also thought, okay, we're going to try to attack now the bottoms again. And then what we saw is on this candle here 2 days ago, so that was during the interest rate decision of the Federal Reserve Bank in the USA. We attacked here the absolute bottom again, and Bitcoin made a turnaround there again. So that's the good thing. And if we have a look here at, well, I disconnected. If we look here, let me just reconnect. Hold on a second, I need to bring up that chart actually. So this one here. Not this one, doesn't really matter. Anyway, so if we see, like, if we compare how has the S&P 500 been doing in comparison, for example, to Bitcoin. So if we can see that we have more downward movement here really in the S&P 500 in the stock market at the moment. Look at the last candles here really since Wednesday. It's breaking off to the south, whereas in Bitcoin, in cryptocurrencies, we made this local bottom again here on Wednesday, and then we saw buying activity taking place again. And I think this is a quite good sign. You know, there seems to be, every time we go into this region of about 18,000 US dollars, that some people are really holding the line there, scooping up Bitcoin. So I consider this as a very, very strong signal. Of course, it's not going to protect us forever. Should we really see another week like this, where we see the S&P 500 going down by 10% or something like this, for sure, cryptocurrencies are going to be affected as well. Nonetheless, I personally think it's a very good sign that we are deviating a little bit from, that basically the crypto markets are just copying what the stock markets are doing at the moment. So that's, in my opinion, really is a nice fresh breath of air. In terms of trading, if you were with us there on Wednesday night for the interest rate decision, as expected, the US interest rate was risen to 3.25%. We had prior to this opened some nice trades in euro US dollars, which we were able during the session to close it nearly at the low, made a profit there of around about 8,200 US dollars. If you haven't heard of that trade, it's probably because you are not on our Trading Academy Telegram channel. If you are interested, in getting updates on trades like this, hearing my thoughts on the markets, especially on the crypto markets, of course, you will find a link in the description of this video where you can join the Telegram channel, totally free. Just information. Don't worry, you are not getting spammed or something by me there. All right, yeah, talking about euro dollar, I said we had this nice trade. We actually re-entered the market then at 98.75. Sadly, I personally was stopped out of this another short trade there yesterday. I know some members of the Telegram channel are still holding onto it and must be now in profit also of with over 100 pips already. So congratulations on that. Let's have here a quick look at the stock market, because it's still important, in my opinion, to have a look at this on it and to kind of see what it's doing, because the stock market is probably going to be the main indicator also later on for cryptocurrencies, for Bitcoin there, especially when the bottom of this bear market is reached. And I did this drawing actually a couple of days ago. No, it's already longer. I think 1.5 weeks ago, where I said, most likely we might be seeing some pattern like this, where we go back into this zone. This already happened here, touch base, and then we are going down, maybe coming a little bit up again. So maybe we are going to recapture this 38 Fibonacci line there. And what I would consider a soft landing there would be somewhere between 3,450 and 3,600 points. We are not that far away anymore there. And I deducted this from this election pattern that I've been talking about for quite a while now already, that the stock market under Biden is oddly behaving in the same way like it has been the first 2 years after Trump. And the last missing puzzle piece here really is this bottom before a new bull market cycle can begin, which I projected a couple of weeks ago here could be somewhere at the beginning of December 2022, of course, that is here in this area, somewhere between 3,400 to 3,600. Might be a little bit lower, might be a little bit higher. So far, we are very well on track. And if I have a look really here on what I see charting-wise from the cryptocurrencies, I must say that I'm pretty confident, actually, that my opinion on this at the moment will test the challenge of time, so to say. One key missing ingredient there still is the so-called Bitcoin dominance. So how many percentage of all cryptocurrency market capitalization is Bitcoin? At the moment, we are at 40.7%. And what you normally see before we have a new bull market cycle is that you'll slowly see the dominance going up here. So I was actually expecting a bit earlier already that we might see a rise here to maybe 48, 49 or 50%. However, it didn't happen, partly because we have now something like US dollar TIFA being more popular than still 4 years ago. So a lot of people choose the option to stay in crypto, but kind of hold it in a cash way. If you want to hold cash in crypto, of course, you need to buy a stable coin. Most of them buying US dollar TIFA. Nonetheless, we are seeing now here that actually the price flipped over the volatility calibrated average true range. Don't worry about this now. It's a quite complicated indicator. However, whenever that happens, usually it indicates a change in trend. Last time it happened was here when it indicated a continuation of a downtrend. And now we flipped just a couple of days over to the north. So maybe that's something that's going to drive us up here into the regions of 48 to 50, which then would confirm me in my opinion that we are pretty close to the bottom of the bear market. Let's have a quick look here at Ethereum. Ethereum really has been quite pondered by more than Bitcoin after the merge. Next Monday, I'm going to do a special there on that crypto show on Ethereum, where I want to have a look at if the merge, at least for the price, maybe is a disaster, and what future price projections really for Ethereum might be. Yeah, anything else? I said here euro dollar is breaking out to the south. So we were under 0.98. So the US dollar is worth more than a euro. Remember, if we scroll out here, not that long ago, here in May, beginning of June, we were still at 1.08. So for a currency, that's a huge move. And I said it's also mainly probably going to continue for a while in that direction, just because we have this enormous difference of interest rates between the USA and the Eurozone. In the USA, you get your 3.25% now. In the Eurozone, you are still at 1.5%. So naturally, institutions are buying more US dollar just because the interest rates are more attractive over there. So this is the big economic trend. Last but not least, let's have a quick look here at what I call the kiss of death. So I'm talking about the supply in profit or loss for Bitcoin, that is. So basically, how many people are currently sitting on losses for their Bitcoin stacks, how many people are currently sitting on profit. And whenever this flips, so like you see here, I hope at least you can see this, whenever you see more people in loss, so the red line goes over the orange line here, this historically speaking has been an indicator that we are at least close to the bottom of the bear market. So if I reset the zoom here, you can see here 2019, to some extent here 2020, especially here this whole area here between 2014 and late 2015, actually that was also valid here back in 2011, has always been an indication Bitcoin is fine, or cryptocurrencies as a general asset class are finding their bottom slowly, and we are going to start a new bull market cycle. Doesn't mean, of course, that immediately now this is the bottom, because a lot of you guys are asking me, where's the bottom going to be for Bitcoin, for Ethereum, for Solana, and so on and so forth. And I always have to say, guys, I don't know. What I can do is I can see the big trends. I can see that we are likely to still see the S&P 500 touch here at least this area between 3,400 and 3,600, maybe even a little bit lower. That would mean probably we are going to see declining prices also still in cryptocurrencies. But after that, and I can guarantee you, when we see this, the sentiment will probably be at its lowest. Everybody that hasn't touched Bitcoin, that hasn't touched cryptocurrencies, that maybe hasn't touched stocks, will tell you, you are crazy to buy cryptocurrencies. My God, has gone down so far. It's going to zero. You know, the old it's going to zero, it's worthless game that we keep on hearing over and over and over again. However, they always forget that the same sentiment we had 4 years ago when Bitcoin was floating around like 4,000 and 3,000 US dollars. It was the same sentiment. Everything is going to zero. Sell while you are still able to sell it. And exactly the same feelings we are seeing now at 19,000. So it might have been already the low there at, what was it, around about 17,500 US dollars. It could go down to 13. Yet for you, important is, do not try to catch the bottom. Nobody is going to be able to do that. Yeah, people always like to propagate that. Yeah, all those influencers out there, all those chart gurus on Twitter and Facebook and signal groups and whatnot, you know, they are trying to convince you, yeah, I'm right, I can project where the bottom is going to be. They cannot. But it doesn't matter for you if you're in for the long run where the bottom is. What you can do is you can dollar cost average your way into cryptocurrencies by, for example, just buying every week, buying every month, by also having a look on maybe not trading cryptocurrencies at the moment, but trading something like forex. That's why I also showed so many trades in euro US dollar in the S&P 500, to kind of prepare yourself for the next bull run, because the money is earned in bear markets, believe it or not. What you do in a bear market will then determine if you are one of those people during the next bull cycle that is going to get rich. Good. So next week, let's have a quick look what we are going to expect in terms of economic news the next 7 days. There's not so much super duper important coming out of the USA, in my opinion. So nothing to the scale of inflation data, of interest rate data, which is really what the market is looking at the moment. One thing, if you are like me from Germany or the Eurozone at least, we are going to see on September 29th next week. So that is next week, Thursday, the German inflation data with a forecast of 8.8%. So Germany is really suffering because of the high energy prices. Germany is still used to be very dependent on Russian gas for a long time and is paying the price for that now, the consumer. So this, if you are living here in Europe, is going to be, of course, important. If it has such a big impact on the stock markets, aside from the German stock market, that is, of course, or on cryptocurrencies, I highly doubt it. Then the number must be like totally crazy that is published there. Other than that, I'm expecting really maybe a more normalized week next week again, where the market is not just eyeing on economic news. So maybe we can become a little bit more reliant also on chart setups there in our trading. I'm, of course, going to update you there on the Telegram group. And as I said, if you're not a member yet, really high time you join that. Yeah, until then, that's really it already for today. So in summary, is really nothing new here from cryptocurrencies. The stock market very well going into our projection. We still see a lot of US dollar buying. If you want to, and I highly recommend that you, that's why I have a Renko chart here, that you trade into the direction of the trend, where I've gotten a lot of mails, a lot of comments. Dirk, why are you always trading euro US dollar, short? Why are you always selling that? Yeah, because it's the trend at the moment. I don't want to position myself against the trend. I don't want to play the game of trying to, when is this trend going to turn around? It's probably going to turn around once we reached this bottom here in our target zone. Maybe things are then slowly going to shift back to risk on. So pro stocks, pro euro, for example, pro also especially cryptocurrencies. Only time will tell. Thank you for your attention today. Have a nice weekend ahead, and leave us a like, subscribe to the channel, join our Telegram channel, and give us a thumb up. Going to see you again next week. Take care and bye-bye.